Hey, what is up, guys? Luke here once again. Hope you guys are having a wonderful day or wonderful weekend. I was gonna post this video yesterday. Actually, I was just too lazy, and it was just a Friday, so didn't have time. But today, I decided to post this. Okay, so basically, what we had on Friday. All right, so on Friday we had a beautiful long, beautiful short, and we ended the day on equilibrium, and we were able to predicate not predicate exactly what the market will do uh, before it happens, and it was pretty nice, right? It was pretty nice. So this is going to be the strategy itself, right? So what did we do? We have 3 steps as always, right? One sweep of previous session low, sorry, high or low. Step 2 chosh. Step 3 FVG for entry. Okay, so that's our 3 steps for the strategy. Okay, so here during New York AM, we swept previous session low, right? We swept London low. Step 2 is getting chosh. We got chosh here. Step 3, do you have an FVG? We have 1 FVG, 2 FVG. We always use the closest FVG. We enter somewhere around here. And of course, you can put your stop loss at the swing low. You can put your stop loss anywhere, but take into account these FVGs that price may want to retest these FVGs. This FVG is a breakaway gap. Breakaway FVG, I'll make more videos about this, but we expect the price to not come back here anyway. Also, this here is a balanced price range from here to here, so we expect the price to not come below the midpoint of it. So like my stop loss can be even just like this. This is also an order block, and you have low, lower low, higher high, so we have a breaker block as well. So this entry is a unicorn. We have a breaker block, we have FVG, we have a order block as well, and yeah, so that's a beautiful entry, and you can see the price never even came back to it. So you can put your stop loss back here, of course, and you can take your maximum TP as London, and you can hold all the way to the top. And but yeah, this here is a big risk to reward. Sorry, big stop loss. I wouldn't dare to take it, but some people took it, and of course you can always put your stop loss around here. And I explained in the chat why this is a safe place to put your stop loss. Even something like this, I'm fine with it, right? Because we have multiple issues of safety nets, right? Issued to us right there. Anyway, so you took your long and you pumped all the way up, right? We also have a short. Before I get into that in a second. Basically, what was I gonna say? So we can take the low, the high, and you can see price came back straight to 2. If it comes to 2 and shows immediate retracement down, then we would know that the price we're going to come back to the midpoint of this range. All right, so keeping that in mind, when we go short, we're going to be aiming for that, and that will be enough, right? So just like how we did the longs on the shorts, we have a sweep of the New York AM, again swept the previous session high, which is the London high, with this candle. Now we wait for step 2 with chosh. We got chosh here. It's just a shift in market structure or change of character of the market. And excuse me more. Anyway, step 3, FVG. Do you have any FVG to enter? Yes sir, we have one right there, so we can go ahead. It's already drawn for you, but you can see the candle came straight to the FVG. Yeah, this is institutional IOED, all right? So it's called institutional order flow entry drills. What this means is that the institutions will touch the FVG and it will displace away. It will go away, right? It will just have one tap. It won't fill the whole FVG. It will just tap away. It will tap it once, go away. Tap it once, go away. In this case, it just tapped it and ran all the way away, right? So something that we want to be seeing. You put your stop loss. Of course, at the highs, you would target 2RR, or you won't target this. Of course, you can, but since I wouldn't be doing that because we're very bullish. So what do? Well, take from the high to the low. We find equilibrium. Where's equilibrium? Equilibrium is right here. So this is where we plan to get out of the trade. Okay, this is a safe, nice, beautiful, safe area to play to. Okay, so you would get your entry here, zero drawdown, absolute zero drawdown, and your stop loss will be there, and you can essentially target your 2RR, or it also coincides with the equilibrium, and you get out here. All right, this move here is 79 ticks. 79 ticks. Sorry, 5. It's 79 ticks. It's almost 80 ticks. So it says it here, 19.75 points. Let's say 5 points is $250. Here you have 20 points, so you have, this is $2,000 move. Okay, from here to here, you could have made $2,000 with a single contract. Easily. You had zero drawdown. In a matter of 10-15 minutes, you hit your target already. Okay, this is the type of trade you should have done. Here you could have took your entry. Here had zero drawdown, right all the way up. Now, you might be asking me, well, look, I want to hold longer, right? I want to hold longer. I don't want to hold till equilibrium. I'm not fascinated with 2K per trade. I want to make more. Well, what do I always teach you guys? Take your Fibonacci, this high, higher high, lower low, higher high, lower low. So this high that manipulated this high, we take it from there, put our standard deviation anchoring point, start right there, and then put the other one at the end of the swing low, and take your standard deviations. When the price comes back to 2, we expect an immediate rejection, right? So you can see the price came back to 2. So you could have not closed here at equilibrium. You could have held all the way here, for example. All right? You could have held all the way here, and that would have made you 30 points. All right? So like, my math is quite crap right now, but I presume it's about 2.5K. Right? You might be satisfied with this now, right? And we only using one contract, guys. Imagine using 2 or 3. Sometimes I use 3 or 4. Anyway, now same scenario here. Once we come to 2, we come back to equilibrium. We came to 2, so we most likely come to equilibrium of this range. And you can see that happening right there. So you could have had your long here, Josh as well. You had a Josh as well, but we don't care about that. You can take, if we have this displacement up, we can come back to the midpoint of the range. And you can see, and we're just holding around here, and then it's going to come back down, blah, 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 etc., etc., right? So you can see that how we knew the price, where would it go, where would it come back to, and where it's going to reverse, when it's going to continue. We can project all these stuff, right? These are not, we're not reacting to price, we're projecting, anticipating where the price will go. And if it goes the way we want it, we'll act on it, right? It's not a 50-50 type of situation. If it goes here, I'll take a long. If it comes here, I'm going to make a short. If you can do that, don't trade. If you can justify both things, you don't trade. This is a if-else clause, okay? If price comes back here, I'm taking a long. Else, I'm not taking a trade, all right? Just like that. So price, we took a long. If price comes to our and rejects, I'm going to take a short to equilibrium. Sorry, to equilibrium. If it doesn't, if else it doesn't, then I'm not touching it. It did it? Yes, it did. Did it come here? Yes, it did. Now, now let's say we hold all the way back here. Let's come. Did it come to 2.5? Yes, it did. If it did, then I'm gonna take a long to equilibrium. If not, if you continue going down, I'm not touching it, right? This is how you should be doing your trades, right? Now, I'm gonna be honest. Most people took this trade here. I didn't. Why? Because my risk to reward was not very good, right? From here, put my stop loss here and aim for this. No, right? I wanted to enter this FVG, right? I gave myself benefit of the doubt that if the price comes back here, I'm going to have a really nice entry, a very safe entry. I'm going to take it, and I can put my stop loss just below the FVG because there's an array of good stuff that's happening around here that can protect our trade position, right? And manage it very well. Now, I didn't form it in. I can see the price going, and then we can know it's gonna keep continuing going up, right? Because this is a buy, this is a market maker sell model. Sorry, market maker buy model, right? We took higher time frame liquidity. We had immediate displacement up. This move here was the first move. This is, by the way, NFP, non-farm payroll. So I told everybody, why? By the way, you might asking me, hey, look, why did we not long here? We have a Chosh FVG. Why didn't we long here? Because we don't have a sweep, right? Anyway. The real move happens 30 minutes after the news drop. This here was a manipulation move. We manipulated and we had our long here. So this was a really good long. But yeah, so I didn't FOMO in. I didn't fear of missing out. I can see the price going up. And I keep telling people, okay, we have expansion macro here in exactly 10 minutes and it's going to pump. Boom. We have the expansion exactly at 9:50 to 10. Boom. Big expansion candle. That could have made you, again, 2K, right? Simple as that. Wait, hold on. 500, 250, 500, 1K. Sorry, 1K, guys. My bad. I don't mean 2K. I'll put all up. I apologize. 1K. All right. 20 points is 1K. Is it? Yeah, it is. Anyway, so I didn't fear of missing out. What did I do? What did I tell people? I'm gonna come back in the PM and just gonna trade the short, right? So price went up. We had a sweep, charge FVG, entered the FVG, and then read it down. And I made 700 on that trade. All right. All right, guys. Now I can end the video. Alright, see you guys. Hope you guys enjoyed. Please subscribe, like, subscribe, comment, show some appreciation, so show some love, and yeah, peace.